The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's program brought to you by...
So she didn't inherit Grandpa's jawline, but there's no doubt she's family. It's your job to raise her, and it can be tough. Let's make it easier. With technology and automation, you can do more, like produce high-quality bales with way less effort. Built-in sensors can measure bale moisture and size, so you can monitor quality on the go and manage your fleet from your phone. Sit back and enjoy effortless operation. Discover an easier way to work.
Well, on Thursday, we saw a fairly quiet grain and oilseed trade. We did slip a little bit lower in quarter beans into the close, but overall, very quiet markets there. No WASDE report on Thursday with the government shutdown, as was originally anticipated. And you look over at the livestock side, another day in a row, 4 days in a row, higher in live and feeder cattle futures, with feeders leading the way. Let's talk through what we're seeing in these markets today on the show, brought to you by John Deere Operations Center. Joining us now, he is Senior Grain and Livestock Analyst with Comstock Investments, Brian Grady. Brian, welcome back to Market Talk. How are you, sir?
Excellent. Thanks for having me back. I really appreciate the opportunity and just talk through everything. That'd be great.
Yeah, well, let's start with the grains. As I mentioned, pretty quiet market trade here again on Thursday. And I made this comment to you before we started that it just feels like these markets are chopping around, waiting for some sort of news. We didn't have a WASDE report. Welcome to day of the WASDE that didn't happen because the government shut down. And so you don't have that October data. You throw in, no fresh news on things like export sales, et cetera, et cetera. It feels like these markets are drifting without something to take hold of, Brian.
Yeah, we're lacking. It's just uncertainty, unknown, and we can use private data on crops and yields and all that stuff to kind of come to numbers. And in all honesty, the October reports are typically rather benign. So I don't think that we would have gotten any real surprises anyway, but the market desires that data still. And so you mentioned the crop production and supply and demand reports, the weekly export sales, all that stuff is lacking. So we're kind of having to generate all this data on our own. And that kind of just leaves the markets directionless and choppy. Soybeans pulled back a little bit. China announced that it would make it a little bit more difficult for the exporters of rare earth metals they have to now apply for export registrations and licenses. And so that's, I think, just leverage ahead of the planned talks between President Trump and President Xi at the end of this month. But, that put a little bit of pressure on soybeans, but nothing meaningful, to be honest with you.
Well, and to that point as well, you bring up China and Trump and Xi, and I'll give you a plug. I know you talked about this with your friend Jim Wiesmeyer, policy analyst on the Comstock YouTube channel, about the reported aid package. And we saw on Thursday, Secretary Rollins made the mention in a cabinet meeting that this is all going to have to wait until the government shutdown is over with. So there's another piece of news, I think, as well, that these markets to some degree are kind of waiting on to see what exactly is going to happen with these reported bailout funds and this aid for farmers here, Brian.
Yeah, so we don't know the dollar amount yet. We know that there is aid coming. That's a certainty. It's just we don't know the dollar amount. We don't know what the process will be. We don't know how it'll be split up. Generally speaking, I think soybeans will get the biggest piece of the pie, but all other commodities are going to want some of the pie as well. And, once the government gets reopened, then we have to announce the details of the plan, and we have to go through the implementation process by USDA, and then the sign-up process, and then the checks start to get cut to farmers and all that stuff. So what we're looking at now is a very optimistic timeline would probably be the end of 2025, and more realistically, we'll be into 2026 before these payments go out. So if the Trump administration wants to use them as a bridge to get us to the 2026 growing season, they are going to need to happen very early in the new year. And so we're kind of up against a timeline here. And unfortunately, we have to get the government reopened. And another vote failed today in the Senate on that stopgap spending measure. And so there just isn't much movement there. Who knows how long this drags on, but the longer it drags on, the longer it's going to take to get the details of the farmer aid and push those eventual payments further down the road.
Well, I wonder about this as well as the shutdown continues and we're waiting on all of this news and these, the certainty for these markets. You mentioned it earlier. We can fall back on private data and things like that. We can look at spreads and chart action and more. I mean, if we're really savvy marketers, can we really dive into some of just the fundamentals that are out there to tell us if there's some things happening in these markets behind the scenes? Maybe there's some export sales potentially happening, et cetera, et cetera. I mean, what can we truly do just looking at some of these fundamentals that we at least do have to give us an idea of, are these markets bullish, bearish, neutral? I mean, what are some things we can look at, Brian?
Well, I think that one is the cash market. So you can look at your basis. So we still have futures trade and we still have a cash market every single day. And what we've seen is some of the basis levels have started to improve through harvest. Now, that's not typical, especially in years when we have record or really big crops as we have this year, record corn crop and really big in the case of soybean. So especially in those eastern areas, eastern corn belt areas and down through the Mississippi, mid to lower Mississippi River area, we are seeing basis improve. So that tells us, one, that there isn't enough supply for what the need is on the export side of things or the usage side of things. And whether that's because the yields aren't as strong as what was anticipated or the farmers putting more supplies in the bin instead of selling off the combine or whatever the case may, it doesn't really matter what the reason is. The fact of the matter is that the supply isn't as much as what the end user or the exporter needed it to be, and that's why the basis is improving. And so that will create some opportunities for farmers. So keep an eye on your local basis levels. I think that one's an important one that will tell you if basis narrows up, that means that they want more supply. If it widens out, it means, hey, sort in the bin and don't give us any. And so there are some opportunities there. And I think that's the clearest one. And that one trades all the time. As long as the futures are trading, we have a cash market. It doesn't matter whether the government's open or not open. We still desire that government data from a price discovery standpoint, but the cash market will give us some clues as well.
Brian Grady with Comstock Investments joining us here today on Market Talk. Let's segue over to the livestock trade. Brian, you and I were talking about this as well before we started. Cattle, 4 days in a row, higher futures trade, feeders leading the way. I made the comment to you, just kind of like a rocket ship this week in feeders. So what's going on exactly? Like, are we just not finding any overhead resistance here? What exactly is happening in cattle this week?
Yeah, absolutely. So feeders have just been on fire, and you mentioned it, no resistance. There's no chart resistance. We're trading at contract and all-time highs. There's no resistance from sellers in that marketplace. And so if you go back to late August and early September, and we started to pull back from those levels, the question was, have we put in major tops? Well, now we know that the top hasn't been put in place yet because we're still marking new highs. And so when we go through this next cycle, when we pull back, and there will be the next cycle when we pull back, we'll go through all that same talk again. And I think that the critical thing right now is that we've seen the funds come in and be active buyers again, and there's just no resistance against it. And when you get a case like that, you end up with multiple days in a row of just very explosive gains, and that's what we've seen this week.
Well, I have to wonder if, seasonality here, a lot of times in the fourth quarter, we'll see some seasonality at play in the beef market, for instance. But, I'm seeing more chatter, folks, commentators and more on social media and things like that. A lot of folks are still very bullish on beef, even at these high prices, Brian. What do you think about that beef demand here heading to the holidays?
Yeah, absolutely. So seasonally, like you mentioned, we should be putting in lows, both in the wholesale beef prices and in the cash cattle market. And so what we've seen is feeder cattle have led us to the upside on this rally. Live cattle have participated, but it hasn't been nearly as volatile and hasn't been nearly as explosive to the upside. And so that market is waiting more on those cash fundamentals, the wholesale beef prices, the cash cattle prices to strengthen. And I think we'll see that. We're already starting to see it a little bit in the wholesale prices. I think the cash trade will probably be steady to higher when all said and done this week. And so then you get some of that coming into play. But this is clearly a market that's being led by the feeder cattle. And one thing on that I want to go back to is that Mexico has found a couple cases of screwworm relatively close to the U.S. border. And so I think that the other factor in the feeder cattle is that clear indications or clear speculation now that the Mexico border won't be reopened anytime soon to cattle imports. And so that is giving the buyers even more conviction and more confidence in those holding those long positions and adding to them.
That's a great point. We continue to see those screwworm cases in Mexico. And so I'm with you. I don't think that border is going to get reopened anytime soon. Well, O'Brien, just across the board, I'll throw this to you here for final thoughts. What else are you paying attention to the most this week, whether it's grain related, livestock related, outside market related? What are you keeping an eye on here as we go through the rest of the week?
Yeah, so I think the shutdown is critical here. And, when that one gets done, it should be reopened by now, to be honest with you. We're getting to the point where get something done, get us a stopgap measure, move on with business into November, and then worry about it at that point again. But we need to have the government reopen first off, so we can start getting some of this data and everything. Geopolitically, the Middle East, that one looks like it's calming down. Russia and Ukraine looks like it's escalating. To be honest with you, again. And so that one, that's a long-term one, and it's been up and down and all over the place. Gold, the gold market is absolutely on fire right now, marking record highs on a daily basis, pushed above $4,000 and for the first time ever. And that was not even a speed bump for it. And so I think that one's a critical one. Just a lot of stuff going on at the moment that's on the periphery outside of the grain markets and the livestock markets. And so there is something for traders to pay attention to. And I think that we're starting to see some of that outside noise kind of in conjunction with the shutdown with the government kind of keep us under wraps, so to speak, within the grain markets. Now, livestock, they're going absolutely bonkers up to the upside on cattle and to the downside on hogs. It took a long time or longer than normal for the hog market to post its seasonal top. But now that, the doors have been broken down, that market looks like it's breaking sharply to the downside.
Well, I know you guys have a ton of resources available there at Comstock. I mentioned your YouTube channel earlier as well. Give another plug for that, along with just a lot of resources and great individuals on the team available. And I'm sure just starting online, Comstock.com is probably one of the best ways to get rolling, right, Brian?
Absolutely. And like you mentioned, visit our YouTube channel, and we put out some great work on there on a daily basis. And so cover a lot of subjects, mostly involving the grain and livestock markets, but we cover other subjects as well. So give us a look.
Brian Grady, Senior Grain and Livestock Analyst with Comstock Investments. Thanks for joining us again on Market Talk, brought to you by John Deere. Have a great one. We'll talk to you again soon.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.